Good morning, class. Welcome back. Today is going to be lecture 3. We're going to continue talking about the philosophy of business, but today we're going to be specifically focusing on an area of business which has become increasingly important in the last 150 years. That is, today we're going to be talking about a discipline of business known as finance. So what is finance?
Professor, can you speak up, please?
Yes. So what is finance? Well, finance is the discipline of business that deals primarily with investments and, exchanges of money for equity. Because as we learn in the philosophy of business, what is the most important thing about business? It's making more money.
Yeah.
Anybody who tells you something besides that is lying to you. They're delusional. They're trying to get something out of you. They're all a bunch of dishonest, pathological liars. The real meaning of life is money. Now,
Wow.
money comes in a variety of forms. Money can be in the form of physical paper bills, or increasingly it can be in the form of abstract currencies, such as cryptocurrency or just like checks and debit and credit. It can be in the form of securities, or it can be in the form of options or stocks. These are all ways that you can have money. And these different kinds of money are all more liquid from each other. Liquid meaning in this case that it's accessible. Cash you have in your wallet is very liquid. You can use it at any time. A credit card might be a little bit less liquid because, it's dependent on your credit card company and your credit score and all that information. Yes?
Does that imply the existence of solid and gas forms of money?
So gas money is something else. Solid money, I don't know, like fiat money?
Professor, can beans be a currency?
Only in a primitive society.
Or a very, very advanced society?
Or a very, very advanced society, the likes of which have not been seen on Earth. You're thinking, we'll get back to that in our class on Economics 3.0. In any case, so money can be in these various forms, some of which, like stocks, for example, if you wanted to use the money you have from a stock, you need to sell the stock, and then you need to cash in the money, and then you can spend it on stuff. So it's less liquid. It's a lot harder to get the actual value out of that stock. So this liquidity is a very important aspect of your currency and your financial portfolio, right? Right?
Yes.
Perfect. Glad you understand. We like to keep business courses interactive, right?
Yeah.
I'm sure you're aware, since this is only our 3rd lecture.
Sorry, I'm pretty tired. I just woke up.
It is 2:30 in the afternoon. Buy yourself a coffee and
Where
get
have
ready
you
for
been
class.
sleeping?
You get it for free in the deluxe barista just down the hallway. This
My
is the
roommate who
College of
sleeps in a
Business.
I thought
bathtub
you were
got better
very
sleep than
anti-coffee.
you.
What are you talking about? Anyway, back to finance. Yes, so liquidity of investments, right? Well, the cash you have in your wallet isn't making more money for the most part. Your stocks are making more money, and there is this correlation. Investments which are less liquid tend to be more profitable. So it's this trade-off, do you want to have the cash on hand, or do you want to be making more cash passively on the assets you already have? The assets you already have. The assets you already have. Wait, that's your capital. It's your capital. That's the money you have to invest into things. Capital. That's your capital. Not like capital letter. Capitalism.
How do you spell that?
C-A-P-I-T-A-L-I-S-M. It's the best word you'll ever hear in business school. It's capitalism. Capitalism is the financial system that allows us to achieve the primary ethos of business. Say it with me.
Money!
Making more
money!
Perfect. You guys are great. Okay. So, how can we leverage our capital to make more money? This is the essence of finance, is determining the way in which you want to make your investments in order to produce more money. Now, one way of investing your capital to make more money, which really is kind of the core method of capitalism, that we're not really going to talk about is in this particular lecture as much, but which we will get back to when we talk about entrepreneurship, is investing in a personal business. This is a common way. It's one of the only ways to make the most money, but it's a very high risk, high reward, that kind of trade-off we've been talking about all semester, type of a deal. But yes, that's kind of the root of capitalism. But for finance, we're going to be talking more about alternative ways to invest your capital in order to accrue more income for yourself.
Like gambling?
No, that is not a great investment. It's
Wouldn't
high
that be the
risk,
same with high risk and high
but
reward?
it's very low reward.
Is gambling considered a business?
If you own a casino, that's a business. And that's something we'll talk about in entrepreneurship, because casinos can be very profitable. As long as you know how to get them to operate legally enough that they won't get shut down.
Oh.
But yes, that's a great question. That's a topic for another time. I love my cup of joe. This contains 1,000 milligrams of caffeine, and I'm halfway done with it. And we only started this lecture like, what, 10 minutes ago? Oh boy.
6 minutes ago, but yeah.
So where did I leave on?
Shush.
Investments. Okay. I'm sure you all know about stocks.
Stonks?
Stonks?
No. That's something else.
Wait,
Stocks.
what are stonks then?
We'll get to that.
We'll get to that.
Stocks, okay?
Stocks.
Cool.
I've never heard that.
So stocks are a very common financial, so this is when you, let's say you own a business, okay? And you're looking for a way to get more money. Well, you could take out a loan, but you have to pay the loan back with interest, and it's, it can be a great hazard, especially if you're just starting your business and you're not sure how successful it's going to be. You can't negotiate good terms for your loan. But what you can do is you can take a portion of what you own in the business. Do you remember what that's called from our accounting lecture?
Stonk. Ah, frick.
No, not stonk. This is equity. Equity. Your amount of ownership that you have over this business is your equity. You can take a piece of your equity and you can sell it to a venture capitalist. You can sell it to a capitalist who will take his capital, he will invest it in a little bit of your company. And if your company goes under, he loses that investment completely. But if your company becomes successful, he owns a portion of your company and is thus entitled to that particular portion of your revenues. Okay? So these are more accounting terms we're bringing up from our lecture on accounting. But yes, so...
Does that mean I can own other businesses?
Kind of. You can own pieces of other businesses, and this is what we're getting at.
I don't want to work under you, though.
Sorry.
Yes?
Are stocks are stocks?
You're saying it again.
I didn't know.
Stocks. Stocks.
Are stocks any similar to like things of shareholders?
Yes.
That's what
actually,
I meant to
yes.
ask.
So
Darn it.
this is what we're getting at. So if you you can sell directly equity in your company to a venture capitalist. This is what's called a private investment. So this venture capitalist has invested into your company, but this is a deal you've worked out one-on-one with this venture capitalist for getting these shares, And we're going to keep assuming the perspective of the business owner for a second, and then we're going to switch back to the capitalist. I promise this is about finance, not entrepreneurship. But let's say you don't want a guy having 10% or 15% or 20% of your company because you're worried about the kind of influence that one individual will have, and you don't really want to be chained up to that kind of responsibility, right? Well, you can do what's called an IPO, an initial public offering. You can go public. So if this investment with the venture capitalist is a private investment, public is opening it so that anybody, any investor can invest into your company. They can buy what are called shares. So say you want to sell 20% of equity in your company to go public. Well, now this 20% is divided up among all of your shares, and people can buy up individual shares. Now, once you go public, you can't control who buys these shares, but you're much more likely to get the best kind of a deal because the price will fluctuate until it matches the actual value of what your company is really worth. So you don't have to worry about getting cheated by a venture capitalist, but also the venture capitalist doesn't have to worry about getting cheated by the business owner who says false promises or something, of that kind of nature. So you've taken this 20% of your business and you've made it into an initial public offering, and now people are buying shares. Well, what does it mean when somebody owns a share in your company? It means at a basic level, they're entitled to a portion of your revenues, or they're entitled to, and they're entitled to have a little bit of a say in the way the company is run, usually in the form of a shareholders meeting. People who own shares, they hold shares, they are shareholders. Shareholders meeting is an assembly of the shareholders to guide company policy. And this kind of goes with the kind of democratic ideals of the United States. Some companies are more autocratic than others, in which the shareholders have less of a say. Think of a company like Facebook, which is pretty much controlled by the board and by Mark Zuckerberg, those kinds of companies, as opposed to one that's more public. And of course, this is idealized. There are stocks that don't necessarily come with revenue, or they don't necessarily come with a seat on a shareholders committee. But this is the general case. You know, you'll learn more about this in Stocks and Options in, I think it's Finance 230, something like that. I don't teach that course. I just teach this class, which I already forgot what I said the course code was. I just teach this class, which is it's UBUS 102. UBUS 102. UBUS 102 philosophy.
Wait, let me check the syllabus. Sorry, one sec.
We can cut this
It
part.
actually doesn't say on the syllabus.
Yeah, we can cut this part out
Okay.
in post.
Yeah,
but
yeah.
This is UBUS
Sorry.
102. This is UBUS 102. Introduction to the disciplines of business, as opposed to UBUS 101, Introduction to the Major of Business, which I'm sure you've all taken or are currently taking because it's a co-requisite in this course.
I didn't take it.
Yes.
You're calling it the discipline of business, but you initially said it was the philosophy of business.
Yes. Yes.
Wait, so which one is it, Professor?
So this is UBUS 102, Introduction to the Philosophy of Business.
Okay, I'll write that on my syllabus.
If I forget this again, smack me or something. Anyway.
I want to smack the teacher.
Well, then let's hope I don't mess it up again. Where was I? Yes, shareholders. So, revenue, position on the board. And that's because these are, if your company goes under, all of the shareholders lose everything they put into your company if they haven't withdrawn it already, And these shareholders can sell to each other their shares. They can sell shares back to you. They can split their own shares, things of that nature. Well, they can't always split their shares. Depends on the law of the jurisdiction, but you get the idea. They are free to do it. They own their share. And they're free to kind of do with their share as fits within the guidelines of the law. So now let's flip the perspective. You are the investor. You have capital and you wish to accrue more wealth off of that capital, a process known as capital gains. Remember this? We talked about this last time in, I haven't decided if this is lecture 3 or lecture 4, but we talked about this in lecture 2. Capital gains.
I remember.
So
That was
you
yesterday.
are, no, it was
Wait.
not. That was 2 days ago.
Sorry, my
Wednesday.
sleep schedule
This
is
is a Monday,
very
Wednesday
thrown off.
course. What?
My sleep schedule
Just
is
drink
very
some
thrown
caffeine,
off.
man. Didn't I say there's free coffee down the corner? This is the College of Business.
I'll have to take you up on that.
Anyway. So you
Sorry.
have capital.
I'm gonna
you
get some
want
right now. Sorry,
capital
guys.
gain. Nope. Wait till class is over. Sit back down in that chair, young man.
Sorry.
Should have gotten coffee before the class started.
Well, I'm sorry.
That other student in the plaid is right.
Plaid.
Yes, the student in the plaid. I believe he said his name was James when we introduced ourselves.
Professor, this
Yeah?
is a Hawaiian shirt.
I wasn't talking to you. I was talking to James in the plaid right there.
But I was the one who said it.
Oh, sorry. So you have capital. You want to accrue capital gains.
I'm gonna fall asleep.
You could choose a company that you think holds promise, a company that you believe in the future will increase in value overall. You could buy shares in that company. And if you're right, you can then sell those shares to get more money. Like those shares will have increased in value. And this is a great way to beat inflation because a good portfolio can rise well above the typical 3.5% inflation rate that happens every year in the United States. So it's a very great way to make sure that your money is not losing its value over time. At least having that baseline and earning some kind of a profit. But if you invest in one company, you really do have the risk of, if this company fails or just loses value, you've now lost a substantial amount of money. So the best approach can often be what's called diversifying your portfolio. What is your portfolio? It's the collection of the shares in the stock that you own or that you have bought into. It's your portfolio, kind of like a physical portfolio full of papers, except not. Now, diversifying your portfolio means making sure a variety of companies are included in your portfolio so that on average, it will go up. Because overall, the economy increases every year, right? Like our GDP rises every year. So if you have a diverse portfolio, you can hope at least to kind of ride on that economic growth and not have to worry about having all your eggs in one basket, you know? Now, of course, what have we talked about in class?
Money.
Higher risk, higher reward.
Reward.
Diversifying your portfolio decreases your risk. So you have, in theory, you could earn a lot more money from a less diverse portfolio if you play your cards right. You know, in theory, if you only invest in a select group of companies that are all really profitable, you'll earn more profit. But of course, it's really hard to tell how share prices are going to react in the future, especially the long-term future, but even in the short-term future, like, who knows what a particular share's value will be tomorrow. So often, investors will split the difference. So we're going to talk about these two kinds of funds. So we're going to talk about two kinds of investment strategies. Okay? So you have a passive portfolio and an active portfolio, or a managed portfolio, or an actively managed portfolio. Okay, so what is the difference between these? So a passive portfolio is meant to kind of operate without much intervention from you, the investor. So if you are investing, say, for personal finance, you might be looking more at a passive portfolio, one that is invested in a diverse array of companies with the goal that this will increase over time, and you don't need to sell or buy or change what you're investing in very often. This is a passive portfolio. An actively managed portfolio will be one that you are actively checking. You're choosing. You're saying, like, you know, I think Kraft Heinz is going to go up. I'll invest in that. I think Walt Disney is going to go down. I will sell in that. I think that Alphabet is going to go up. I'll invest in that. That kind of a nature. So you are really playing the game a lot more. So you have the potential to earn a lot more money, but it's also much higher risk. So often, if you're working for an investment firm, something that will represent clients who are looking to invest, you will split their money into both of these kinds of funds. You'll put some of their money into a passive portfolio so that they're at least making a benchmark profit, and you put some of their funds into an active portfolio in the hopes that they can get good gains. And I'll be honest, like, it's very high risk. A skilled financier, a skilled investment guy, a skilled fiduciary, still very often will be wrong. Now, of course, you'll hear the study cited where the cat randomly pressing buttons beat the financial investor. I wouldn't base your financial investments on that because, as you know, business majors know one thing and one thing only.
Cats?
Making money.
Cats are dumb.
Yes. You there?
You mentioned the word, it's fiduciary?
Fiduciary, yes.
Fiduciary. What? Can you define that, please?
Yeah, so a fiduciary is just a specific kind of investment manager, usually in this concept of, like, family finance or personal finance. Okay. They are held to a higher level of scrutiny than specific other kinds of investment brokers, and I don't believe they exist as a separate class in the United States currently, but they did historically, and they do in some countries, and I think they do in some states. So, you know, it's just something to watch out for. So, like, a fiduciary has certain disclosure agreements they have to make. They have certain restrictions they can do, which can mean that you make less money with them, but that they're more. They're held to a higher standard of ethics. Who cares about ethics? We want money. So fiduciaries can leave. They can kiss my behind goodbye. Bye-bye, fiduciaries. We're going to focus on high-risk, high-reward investments because finance. Hey, focus. There will be a test on this. Which reminds me, who here remembers when our next test is?
Tomorrow.
No, it's not tomorrow. This is Wednesday. This is Monday, Wednesday class. We do not have class tomorrow. If you come to this room at this time tomorrow, you will be crashing a high-level finance lecture, which could be fun.
Is
but
it 2 weeks from now?
No. But
Wait,
closer.
let me check the syllabus again.
That's cheating.
No. Hey. I'm not looking.
It's a week and a half from now. It's not next Monday, but it's the Monday after. Same time, same place. Bring your pencils, bring your calculators, but not a graphing calculator.
What? What if I want to graph
Imagining-
the stonk?
Nope.
Imagine
But it goes up.
That's
It's supposed to go up.
Imagine assuming we have classes on Thursday.
Up.
I was going to say, the business major philosophy is class 3 days a week. Make money all days of the week. Party
Yeah.
4 days of the week.
Yeah.
Yes.
Where can I get a non-graphing calculator? I don't have one.
You could buy one with your money.
Finance.
Wait, but I don't have money yet. That happens after the test, right?
No. You start now. You take the lessons we learned in this class and you apply them, and I promise you, by the time our first test rolls around, you'll be able to afford a non-graphing calculator.
A guy dropped his wallet yesterday. I say that's a profit.
Now that, my friends, is good business. That is sound strategy right there.
Speaking of which, when do you want your calculator back, by the way?
Anyway, managed, active, passive. Mix both and you'll get decent gains with lower levels of risk, than if you just pursue active. But you won't get the same level of gains that you have the potential to get with active. So now, who here is familiar with shorting a stock?
Not me.
Okay. So shorting a stock is when you believe the value of a company, not that it's going to go up, but you think the value of a company is going to go down.
Oh. That's
So
bad.
you're making a statement. You're paying on the value that the stock has today, in the hopes that the stock value will go down. If the stock value goes down on a short, that's when you make money. Okay.
Okay.
Now that is the very typical stocks, very typical investment. They're, yeah.
So can we now talk about the difference between a stock and a stonk?
Sure. Disclaimer, the next portion of this lecture is fiction. Okay, yes.
Wait.
So class, now we're
Wait,
going
are
to
we
talk.
not really?
The first alternative investment besides a stock that we're going to talk about today is what's called a stonk, okay? Stonk? Yes. So in
Yes.
1990, in the 1990s, Richard... Yes? In the 1990s, Richard Dawkins pioneered meme theory. The idea that our thoughts, specific thoughts, can spread throughout a society and evolve over time just like organisms can. The idea that thoughts that are better will thrive and thoughts that are worse will go extinct. Now, how can we use this to our advantage? Well,
Your thoughts are
there are certain memes that by spreading we can stand to make a large profit on.
Can you give examples?
Potatoes.
Yes. No. Let's say for example that there are two political candidates running for an office that we lie in the jurisdiction of. It's called Candidate A and Candidate B. Candidate A wants to tighten regulations on businesses like ours. Candidate B wants to relax those same regulations and has taken hefty bribes from companies like us. Well, spread the memes that company A is, or that spread the memes that candidate A is totally cringe, and then you can cash in on those memes, and that, my friends, is a stonk maneuver. Now, it's different from stonk the noun. This is stonk the verb. This is stonking or a stonk maneuver. A stonk refers specifically to a financial meme that stands to make a given party a profit. So if I put out a meme like, wouldn't it be totally based if you all bought Kraft Heinz because I am investing in Kraft Heinz and I stand to gain a profit from other people investing in Kraft Heinz? That would be a stonk on my behalf, and I would have just done a stonking maneuver. Now, a stonking maneuver can go one of two ways. Either you actually do realize a significant profit from the stonking maneuver, in which case we call that a stark-cess. Or you can make what you consider an inadequate amount of capital gain from a stonking maneuver, or possibly no gain or even a loss. And this is what's called a flonk. Okay? So stonking maneuver, stark-cess, and flonk are key terms from this particular investment mechanism. Okay?
Are these going to be on the test?
Do I have to write this down?
Yes. So this will be on the next test. It will be an extra credit question because this is a higher level finance concept. It will not be on the exam,
Okay.
Let's go.
but you will probably want to know it, especially if you take Finance 307, Intro to Stonking.
But this is just a 100 class, isn't it?
Well, yes, but you're all business majors, so I assume that at some point you'll be taking high level
Do I have to
classes.
take that to graduate?
Only if you're a finance major, and actually only as a technical
Wait, what's my
elective.
major?
Funny.
Finance majors, I believe, have the option to take the stonking courses as part of their like electives, if I recall correctly. I will make it perfectly clear right now. I teach a lot of the UBUS courses, but my specialty is in accountancy. So I'm not really a financial individual, you know. But I know the basics, so I'm qualified to teach this course.
Can I ask, what are your qualifications, Professor?
Yes, so I am the comptroller for the United States of America, and I was briefly the general comptroller to the United Nations. In addition, I have 2 PhDs, one in general business studies, one in accountancy. Yes?
Why were you only comptroller briefly for the United Nations?
Because they have 1-term limits.
Ah, good.
Additionally, I have a Master of Arts in jazz dance. Yes.
Can you demonstrate?
No.
Dang, all these PhDs and he's still teaching a class.
That's what PhDs are for.
Oh.
This is a business PhD. I didn't get it to get a business job.
Can you
Yes.
get a PhD in jazz dance so we can learn it?
If you're looking to take jazz dance courses, well, I don't know if they're offered at this particular university, but I know that the local community college, what is it called?
Was it CSU?
Yeah, CSU. I believe they offer jazz dance courses, so you should see if
I
that
heard they
person-
had a pretty good bean class.
Calls it youth. It's a
Oh, they're
C.
bean minor? Yeah, they're kind of known for that, I think.
I think I'm gonna take that over the summer.
I am drinking more caffeine.
Oh yeah.
I'm about to fall asleep.
You should
That's why
share.
you get a coffee before class.
You should share with them.
Anyway.
Can I have some of your
The sister
coffee?
of stocks.
Here, give me-
Back
can I
off.
have some of your-
Oh, also the disclaimer is no longer in effect. The sister of stocks. Bonds. The name's Bond.
Buy war bonds.
War bonds.
Have
No,
you
no,
not heard
get
that
it.
saying?
We are not at war.
We're going to war.
I don't care what they tell
No.
you.
Not yet.
We are not at war.
Yet?
We are just involved militarily in some places. But that's just sound business practice.
We can make finances off of these stuff.
Bingo! I like the way you think. Anyway, bonds. So, bonds, governments need money, right? Governments need money. How do they get their money? Well, they get their money from
Bonds.
taxes. But, what if they don't get enough money from taxes? Because their citizens are poor and living in squalor. Well, then they can do what's are called distributing bonds. So a bond is something you buy because you have confidence in the government. Bonds, And these bonds, yes?
Do you have confidence in the government?
I don't think you're allowed to ask that
What
question.
do you mean? It's a free
I
country?
have as much confidence in the government as I should.
Which is...
All the confidence I need. An adequate level.
Stop interrupting. You're making this lecture go longer.
Sorry, I'm kind of like about to... I'm like going unconscious
No.
as we speak.
Finally, I can utilize my TA and his extreme expertise in the field of bonds. Bonds!
Are they related to that James Bond guy, perchance?
Yes. They're named after him, actually. He was the first. He encouraged the United States government or the United Kingdom government to distribute bonds. Back when they invented bonds. Back in the 1730s. I'm just making more and more of this stuff up as we go.
What?
Why do you keep
I'm
saying
money
bonds
to
in a
be-
particular
Bonds.
manner?
Because I like bonds. They make me feel.
If
alive.
bonds are sibling to stocks, does that mean they have fights?
No, because
Who's their father?
bonds are girls.
Wait, yeah, who's the father of their sister?
Who's the father? The United States government and the banks.
But how does that be if bonds came from the United Kingdom?
Freedom.
I didn't know
Bonds.
the government was a person.
The
You've never heard of
government's a
Uncle
person?
Sam?
Oh, I didn't know
Oh.
he was real.
Yes, yes.
I thought he was
yes,
just a
yes.
fake
No, Uncle
guy.
Sam. He's my uncle. My Uncle Sam. He rules this country.
Does that mean
With
you
his
have
wife, Rosie the
higher
Riveter.
power than the government?
That's just sound business practice.
Is he the Miss Frizzle of business?
Am I the Miss Frizzle of business? I'm not familiar with that. Is she a professor at this school who doesn't teach business?
I
So
heard she
don't
owns
know-
a magic school bus.
Yeah, she got the flying school bus.
What
I'm
subject
jealous.
does
I
she
wanna
teach?
take her
If it's
class.
not business, what is she doing with her
I don't
life?
know. I think she teaches everything.
So business. Okay. Perfect. So, bonds. Bonds are something you buy from the government in order to make returns on later. You make very little returns because generally bonds are very low risk, and you know what we say.
Low risk,
Low risk, high
reward.
reward.
Bingo. No. Yes. No.
Okay.
Yes. No. Yes. Bonds.
Oh,
Okay. So.
wake up.
What are the most important terms?
Wake up,
Ah!
Ron. Wake up.
What are the most important terms regarding bonds?
James.
Let's start with the principle. The principle is
Up to school?
no. The principle is the amount of money that is the initial value of the bond. It is the principle. It is the first value of the bond. Here's a cup of coffee. Open your mouth.
I think he's drowning.
That's your capital for today.
I think I'm awake.
But you didn't make any money.
But maturity is the next term related to bonds. Maturity is how long it takes before you can start collecting on your bond, before you can start achieving gains on your bond. It's how long it takes between when you pay principal and when the government starts to pay you back. Okay? There are short-term bonds, there are long-term bonds. These are measures of how long the maturity date is.
Yours
Yeah.
is really long.
You can have 6-month bonds. You can have
You're
1-year
gonna be-
bonds. You can have 10-year bonds. You can have 30-year bonds. You can have 50-year bonds.
Dang, they're old.
Yes.
That's like the age of my sister.
Your sister's 50?
Interesting.
Yeah, and
Is she a business major?
I
I
doubt
think-
it.
I think so.
Great. Anyway, coupon rates. Coupon rate. What is the coupon rate of a bond? What is the coupon? Well, the coupon is how much interest the issuer of the bond, the government in question, is paying to you, the holder of the bond holder. Holding shares, holding bonds, bond holder. The name's holder. Bond holder. My brother Jared, he's a freak show, but I am bond. Anyway,
Wait, did he say chair?
Jared, I said Jared, my brother Jared. But my name's Bond. Bond
I
holder.
heard chair.
Anyway, the coupon is the interest rate that the issuer is paying back to you, the holder. It's how much you're being paid on the principal once you start collecting. Now,
It got cold.
there are two
guys are
kinds of
wimps.
bonds when it
Sorry.
comes to coupon. You can have
I
what are
just
called
smacked you.
fixed rate bonds, where the coupon is set for
illegal.
life, for the life of the bond. The coupon is one number. Or you can have floating rate rates, where the coupon value varies
Oh.
over the life of the bond.
Oh,
Are these like the coupons that my aunt keeps in her wallet with her
those are
Sonic
sad,
and
pathetic
Subway?
coupons.
Those give
But-
discounts.
They give me like a free drink.
You get the 90-cent corn
want
dogs
fries.
before.
Why do you need a free drink when you have unlimited free coffee here at the College of Business? What
Well,
do you
I
think
can't
we're
get
paying
it.
for?
I'm stuck
Fries.
in this room for
Aren't
like
we
3
technically paying
years.
for these?
Get out of my office, Mr. Freeman.
Okay.
Anyway, now that bozo is gone, let's move on to the yield. Now, the yield is the rate of return received from investing in the bond. So, the current yield is the annual interest payment, so that's how much interest you are making on the bond, divided by the
Professor, Mr. Free, whatever. What's your name again?
That's James. Mr. Freeman left.
Oh, I think he's trying to get back in.
Mr. Freeman, don't let me come out there.
I'm not even doing anything. I'm just looking through the door.
You
Name's
better
holder.
leave.
Bond holder.
Yeah, he's gonna make a movie about you.
He's gonna steal my finances. Is what I'm gonna. Is
Let's
what
just
he's
say
gonna
you
do.
only die once.
Just take my finances instead.
There goes Mr. Freeman. He won't be bothering us anymore. It's just sound business strategy. This is becoming increasingly deranged.
Anyway, but then we get free stuff if we have that free coupon.
Ah,
with
it's
us.
ghost! Oh my gosh! Oh my gosh, stay back! Stay back, stay back!
It's not his ghost, that's James. We like James.
Guys,
Oh.
he's my twin. Come on.
This is
Why you
so
guys like this
deranged.
too?
Anyway. Yield. Blah 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 blah.
I don't think that's part of the
Market price. How much the bond is worth if you sell it. That's pretty basic. That's bonds. Buy bonds. Let's move on to a different kind of investment option that you can do. So we've talked about stocks. We've talked about bonds. Let's move on to what are called options. Okay, options. Now, you can go to the supermarket, right? And you
Yeah.
can buy a gallon of onions.
There's a lot of onions.
Yes, a full gallon. That's a lot to drink.
Wait, onions
Where
can
do you
be.
drink
Wait, we can drink
onions?
onions.
Hey, you didn't know?
So let's say you go to the
Chunky
supermarket
salsa.
and you buy a full gallon of onions. That's not really valuable, is it? Like you can't make a profit on that.
I think it's valuable.
Salsa.
You
I
can't
like
make
it.
gains on that.
But it tastes.
What is the first rule of business?
Make money.
Money.
Bingo.
Use it to buy onions.
Anyway, so if you buy a gallon of onions,
Over.
you might as well just pour that on the
Have
ground.
layers.
Because, you know, all you're gonna get from that onions besides a nice smoothie is nothing.
Oh.
You'll consume them. You won't be making a profit. But
Yeah.
there is a way investors have found
Weirdo.
to turn product into profit.
Just like your brother.
And I'm not talking about wholesaling, which you'll learn about in your accountancy section of this course. I'm talking, of course, about options. So what is an option? Well, let's say I go to a farmer who sells onions. Well, onions, they can only be harvested in a very particular kind of year. They can only be hunted in the month of January.
Is it October? Because October starts with an O, like onions.
No, did you not hear me? They can only be hunted in the month of January. Anyway, so what I can do is, well, maybe this farmer is struggling financially for the part of the year when it isn't January. So maybe I go to him in July, and I say, "Hey, farmer, I'll pay you."
Wait, his name is Farmer?
Yes, farmer. So farmer, I will pay you $600 today for 100 gallons of onions once you get them in January.
Okay.
Now, let's say he hunts them, and it turns out that what I paid would be a really cheap price for onions that January. Then I can sell the onions that I got for a very low price for the regular market price, and I've now made gains.
Oh.
That is the basic tenet of an option. Okay? Now, of course, the value, maybe so many onions are hunted in January that the price goes down. below what I paid for it. Well, now I'm out money. I'm still forced to go through and buy those, 100 gallons of onions from Farmer in January. But, I knew, I had the foresight, I had the good business sense to realize that this January, there wasn't going to be a big yield of onions. And so onions were going to be quite valuable this January. Yes? The hunters,
Yeah,
they went
but
out
onion.
with their muskets, and they brought back only a couple hundred gallons of onions that year. And now I own 600 of those several hundred. And so I could sell them for a very, very, very nice gain. We love gains because, of course, what is the first rule of business?
Buy
Money.
onions.
Make
Money.
money, make money, make money, make money, make money. That is the first rule of business. Don't let anybody tell you otherwise. So options. Do you get the concept? Yes?
Yes.
Now, in some jurisdictions, options are frowned upon, not because they aren't financially sound, because they're seen as corrupt or, harmful to commerce or these sorts of things. What I say is, if you're doing it wisely, then it's sound business practice. Yes? And we love sound business practice because, of course, that's how you make money. And what is the first rule of being a business major?
Make money.
Make money. Now you all are catching on. I do think you're going to ace this test.
11 p.m. at night.
Jimmy, are you messing with me again? James, sorry, I think you're your
Now.
big brother.
Don't talk about the dead brother.
Let's talk. We've talked about
Stop breathing down my
bonds,
neck,
We've talked about
I'm not
stocks.
even-
We've talked about
Gosh,
options.
please get away.
Let's kind of go back
Shut
to
up,
Don't make me tell
stocks.
the teacher. Can I raise my
So
hand?
we talked about public
Can I
shares
raise my
that you can buy.
Tell the teacher.
Can I raise
Be
my
a
hand?
shareholder in a publicly traded corporation. But before that, we gave the example of directly yes.
Professor, James is questioning your authority.
I didn't question your authority.
Yeah, he said you lied.
I didn't say he lied.
He
You
lied.
did. No, he said that you said Professor lied.
I didn't say the professor
Yeah,
lied.
you
You're
did.
lying.
One of you is lying, and that's fine with me as long as you make money. So enjoy the rest of the lecture.
Shut up.
Anyway, let's go back. Let's go back to the buying 20% from the founder.
You're right.
Now let's say Pete. We'll call him Pete. Yeah. He runs
So?
a peat store that sells peat fertilizer. So it's Pete's Peat. And he's been running this place for 2 years. But he's looking to expand, but he doesn't have the funds. So he comes to you, a venture capitalist, and he says, "Look, I'll sell you 20% of equity in my company for $3,000." And you say, "Well, Pete's, they're looking to grow. I think they're going to be making much more than this $3,000 in some time, and then I'll have my money's back, of course." So then you could
Excuse
say,
me, Professor. What's the plural of money?
the plural of money depends.
Money's
In the present tense.
What?
What?
So there are two plurals of money. So money can be a collective noun when it's being used to refer to currency that you possess. Money can also be a singular noun when it's referring to a particular currency. So the plural of the collective noun is money still because it's a collective noun, it's a mass noun. The plural of money, the singular noun, is monies, as in like if you have euros and you have rubles, you have two monies.
Okay. I don't have this. I said
Anyway.
I don't have that.
Let's go back to Pete's Pete. So this is what's called venture capitalism. It's a venture capitalism.
Sorry. I don't have
Because
all the money
you're taking
you
a
have,
business
James.
venture, yes, and you are using your capital to invest into that venture in the hopes that you get returns. Capitalism in a venture, this is venture capitalism, okay?
Take notes.
Now this is probably the epitome of high risk, high reward because these businesses fail all the time. But if you know that a business is going to get bigger, you can invest in the equity, you'll have a say in the company, share the revenue, and above all, you will be making capital gains. And making money is the foundation of being a business major. It is the most important thing. I cannot stress this enough. It is the most important thing. Now, We've talked about stocks. We've talked about bonds. We've talked about options. We've talked about venture capital. What time am I at right now?
45 minutes.
Cool. I'll keep it under an hour. I'm just going to talk about one more thing that's not a different mechanism for investment. I'm going to talk more about.
Can you talk about like those dudes that are on the dollar bills?
Yeah, so those are what are called presidents. They're in charge in this country.
What's a president?
Wait, what about the Franklin guy?
Franklin?
When was he president?
I don't know. A long time ago. Ask a history professor.
This
They
is
probably know.
business, not history.
Sorry, I just want to know information.
Check it out.
History teachers, they love that sort of thing. I don't know. I prefer to make money, to be honest. But you heard that, Eddie?
No.
Actually, this is a good point. Does anybody have any questions about anything we've talked about so far? Anything they're curious to learn more about? Yes.
Professor, how much money do you have?
All of it. Next question. Next question.
Can you go over stocks again?
Sure, but first, I will put it to you like this. I'm an accountant, but I'm also a wonderful chef.
Can you cook for us?
Wait, do you know the perfect onion recipe?
I prefer them raw. I just...
Do you eat the skin?
Skin.
Oh,
Layers.
Layers? What kind of onions are you guys drinking?
Drinking.
Yeah.
We eat our onion.
the ones that make you cry.
Okay, I think y'all are eating your onions moldy. You gotta drink them fresh when they're still liquid and not curdled, like whatever you're describing.
Yeah. Where do you guys hunt your onions?
You don't even do the same thing. Shush. You don't even do the same thing as a professor.
Don't make
tastes
me
good.
don't
I'll
make me
take
get
what I
rid of
can
your
get.
annuary break.
I was gonna go during the hunting season and I was gonna drink them all.
Teacher's pet.
Anyway, somebody was asking me to talk more about stocks. So, stocks are financial means that are meant to incur capital gains. You apply them in what's known as a stocking maneuver. If it goes well, it's a stock success. If it goes poorly, it's a flonk. Any more questions?
No.
Yes, you?
I say with stocks, why do some people use them for situations that don't actually involve money?
Because lay people are ignorant. Yeah. Yes.
I heard a rumor that you're a mod on r/Wall Street Bets. Is that true?
I only do what is good financial sense.
Do you think being a mod on r/Wall Street Bets is a good financial sense?
If it's good business practice,
Do you think it is?
I'm not sure. Do you think it is?
You should stop talking about this.
You're digging yourself into a hole, sir.
I would point out, being involved in a community like that would make for some wonderful opportunities for stalking maneuvers. That could be great stock successes. I may or may not have been invested in GameStop in 2015. And I may or may not have sold abruptly around, I don't know, 2021.
Could I still get money off the dark web?
If it's good business practice, you'll want to talk to Cambridge Analytica about that. She's a friend of mine.
Okay.
What are we gonna tell Jimmy's dad?
Who's dad?
The guy.
I'm James.
What-
How do you keep forgetting my name?
Sorry,
Oh, James, yes.
You remember him
About
the guy who's
about your
Don't worry, my
He's on
parents
the
didn't like him
floor.
anyway.
about your twin brother, esteemed economist Milton Friedman.
It's okay, my parents didn't even care about him anyway.
That's good because I don't care about Milton either. Anyway,
he's
I
in
was
the
a star
way.
child.
I need to get over him.
push him over. Good business practice.
Let's
Now,
take our problems and push
I want to
them
talk about
somewhere
one
else.
more thing. There's two more things, yes, that I would like to talk about. So the first before we get to the interactive portion of the lecture.
Ooh.
So the first was called
I get coffee.
ESG investments. So this is environmental, societal, and governance investment. So this involves basically an analysis of companies you hope to invest in for stocks or options or bonds or whatnot, on the basis of their company environment, their corporate governance, and their societal impact. So, you know, there's a surprising amount of correlation between a company which is concerned about its practices for its employees' welfare and its success economically, especially in the current climate where people are driven by, you know, they want to deal with companies who they believe are engaging with the world in a positive way. Now, of course, you know what I'm going to say. As long as it makes you more money, it's good business practice.
Yeah.
So, deal with ESG as you will, yes? The other thing I do want to talk about is trust funds. So if you are an individual with a husband,
You dropped your coffee.
No, I was gonna drink.
You were gonna take his cup?
No, I was gonna leave it and use a straw.
Teacher's
if you
pet.
are an individual with a high amount of net worth, you could have the opportunity to invest in what are called trust funds, which are, or not trust funds, hedge funds. Did I say trust funds the whole time?
Yes.
Yes.
I mean, I guess if you do have a lot of net worth, you could invest in a trust fund. But hedge funds is what I was meaning to say. Think of it like a regular investment fund, but better. And you have to be rich to get in. So it's like an exclusive club. Just like a lot of the clubs on campus.
I want to be in there.
That's a good ambition.
Maybe
Now,
you should
Yeah.
get more money.
start now. Start making that money today. And you can
Yeah.
put it in a trust, in a hedge
My
fund.
family's part of it.
James, you don't have to flex your goofy muscles all over me, okay?
Okay.
Yeah.
Now, before we wrap up, I wanted to do an interactive portion of the lecture. So, we've talked about 5 types of financial instruments, but 4 kinds of investments today. So we talked about regular old cash, we talked about stocks, shares, we talked about bonds, we talked about options, and we talked about venture capital. I want you to come up here and give a sales pitch for one of those 4 methods of investment. Based on what we've learned in class today, perhaps drawing on your own personal experience,
I'm gonna go last.
and I want you to make it seem like investing in your particular financial instrument would be sound business practice, okay? Anybody want to go first?
You should do it. You should do it.
You, in the white fedora, you're doing it, okay? Come
Okay.
on.
All right.
Now, tell me really quickly, which,
Step over.
you watch it. Tell me really quickly, what financial instrument you'll be representing. Whichever one you pick will be off the table for the other 2 students.
Ooh. Okay. Let me pick the easiest one. Cash.
Cash. Okay.
Yes.
Now, let's say I am a capitalist looking to get capital gains. Try and sell me on cash.
So.
Hi there. My name is Steve Banksy.
Hi, Steve.
I'm wealthy, and I want to be wealthy.
Why are you so terrified?
I'm wealthy, and I want to be wealthier. Can you help?
Yes. So what you do is you go my.
Yes.
Come on.
You have to give me things, and then in return, I give you green thing. And that's
So you're literally just selling me something, or actually, you're offering to buy something from me.
you buy something from me.
I don't think he
No,
understands
you-
it.
Oh. Wait, Banksy, wait. How about we, have you heard of the lottery?
He took your fedora.
What am I gonna do?
Next.
Oh.
So cash is now off the table, which is probably for the best because that was the wrong decision. Cash is not a sound investment. It is not sound business practice. Who which of you is next?
Movie.
I'm gonna take 2 more students, I think, before we wrap it up. James, how about you? Come on up here.
I don't want to.
No.
You're gonna kill me if I don't.
I'm not gonna kill you. I'm not
You
deranged.
killed my brother!
That's because it was sound business practice.
He's lying on the ground!
Anyway, what investment are you gonna be offering us today?
Stocks?
Perfect.
That was a voice crack.
That's because I'm getting in character. Hello, my name is Steve Banksy. I'm very wealthy, and I hope to get wealthier. Can you help me?
You should invest in stocks.
Why should I invest in stocks?
Because if that company does good, you make more money, like better.
I do love making more money.
But
What's a good strategy for me to do this investing in stocks you prescribe?
technically, in my opinion, you should start in like newer companies because a lot of people normally invest in them a lot early on, so their stocks normally go up faster.
Interesting. Thank you for your advice, young man.
No problem.
Now, see, that was slightly better than the cash one. Let's see what our next student volunteer can do. How about you in the purple?
Oh, jeez. Stuck in my hoodie.
Now tell me, young lady, what investment instrument will you be prescribing today?
I guess I will be. Sorry, I don't think Carol. I guess I'll be talking about bonds.
Bonds. Greetings. My name is Steve Banksy. I love capital gains. I am very wealthy, and I would like to become wealthier. Can you help me?
Well, I can most likely
Has to
try.
look up at him.
How much money do you usually keep
Fiber bones
at
out.
home? Either possibly underneath
You're
the
shorter than
bed
her.
or just somewhere hidden.
A lot.
How much do you think you're at risk to possibly being robbed or someone to try and take said money?
Substantially.
Wouldn't it be better to place it possibly somewhere where it could be a bit safer than perhaps your bed or wherever?
That makes sense, but I
I
won't
keep
pay for
all
the
my
safe.
money in my bed.
That is true.
And banks, ooh, I wouldn't want to put it in a bank.
How much do you trust the government?
I mean, there's enough politicians who are on my payroll that I think I'll be fine with them.
Then why not try and possibly take a look at a bond?
What is a bond?
Am I allowed to go a little off like the track of an actual bond is?
Sure.
So with a
Forgot.
bond, you put your trust in the government just a little bit. You pay the government off however much you want to pay the bond for, and they will keep it for you over time. It might either grow and grow, or it might stay the same depending on the bond you put in.
Huh?
You might also,
You did the worst out of all of us.
you might
You
also
didn't
get
even do any
some
test
money
yet.
back as years
Jerk.
go on. So in
face.
case
You
you've
didn't
lost
even present
previous
a
money
cash
you already
flow.
had, you still have a backup.
What? But
Well,
hey,
Yeah.
I'm still gonna win.
Okay.
I'm still gonna
Well,
beat
maybe I'll have
you
to try this bond.
on the
stuff.
money.
Anything to do with James Bond?
That I'm not sure.
my
but
dad
it could
gave me
be
this
more of a look.
100% off coupon.
I wanted to recite my thing for me. Well, pleasure doing business
Wait,
with you,
is that
young
for the
lady.
corn dog?
Did you do this too as well?
Banksy,
I think
out.
so.
I don't want it.
Students, that
gosh.
was an excellent job. I'm very proud of how much of this lecture you learned. I hope you all took good notes because remember, not this Monday, but the Monday after will be our first test. It will be on the basics of business philosophy we've talked about so far, as well as the introduction to finance that we're covering today, and over the next 2 lectures. Okay? Cool. Well, then you all have a wonderful day. Be sure to grab some coffee on your way out, and I will see you all next Monday.
Can someone help me with my brother?
No, that's not sound business strategy.
Stuff to view.
Was it actually
Wait, where's the
right, like
button?
semi-right above
How do I-
Alonzo?
No, it's
So-
it's.
so-
Let me find
It's
it.
not just a place to store money to keep
Oh,
it safer.
oh, there it is.
The government does pay interest
There it
on
is.
bonds that you take
Oh,
out.
but
So
that's
you
the zoom
will,
button.
you'll get more.